Thank you, everyone. Welcome to WOW Summit. My name's Joel Flynn. I'm the Chief Correspondent at Forecast. Hopefully one of you have heard of Forecast. Essentially, we make videos, certainly that's what I do mostly, around what's happening in crypto, Web3, blockchain at the moment. There's a lot of it at the moment, I think it's fair to say, and we're going to dig into a little bit of what's going on today with some of our panelists who I'll introduce in just a second. I will just say, to start with, that there is very clearly a crisis in the world's economy at the moment, but it is not a crisis of crypto, and we're going to dig into a few reasons why. Hopefully the panel next to me are going to have a few thoughts of it. So Michael, why don't we start with you? Do you want to introduce yourself, tell us a bit about yourself, and then we can go down the line?
Sure. Thanks so much. Hi everyone, my name is Michael Lau. I'm Senior Vice President and Global Head of Sales for Bullish. Bullish is a centralized, regulated exchange for institutions, been around since 2021, and yeah, just really excited to be here. It's nice to see that Hong Kong's back. And,
it feels like it's back, doesn't
it? No, it does,
yeah.
right? Yeah, exactly. And so it's really good to be able to join the panel here with my fellow panelists.
Hi, Vincent Chalk here from First Digital Trust. We are a Hong Kong-based trustee, registered trust company, and we've been around since 2017, basically dealing and helping crypto clients with custody. We are multi-asset custodian, so beyond crypto, we hold traditional assets, we've tokenized several different types of asset classes, as well as we have been dealing with the reserves for stable coins since 2018.
Josh.
Hey guys, my name is Josh Du. I run digital assets at Animoca, basically running the digital treasuries for the entire Animoca Brands group. Now for Animoca, we're one of the largest Web3 companies in the world, especially in Asia. We have a lot of interesting portfolio companies, including Sandbox, that everyone knows and loves. The business we're in is mostly for metaverse and GameFi and NFT related. Super happy to be here and enjoy my fellow panelists to talk about traditional finance into digital transformation. Thanks for attending.
Hi everyone. I'm happy to be here. My name is Vincent Xiong. I'm from Antalpha, head of business development of Hong Kong office. So we are one of the biggest institutions providing comprehensive business for miners and traders, including borrowing, lending, and leveraging. So, yep, nice to be here.
Great, thank you everyone. The panel name is unfortunately very small, but for those of you that can't read it, it is From Traditional Finance to Digital Transformation, exploring the interplay between digital assets and financial institutions. And Josh, I want to start with you. You have a decade and a half of experience in crypto, but in traditional assets as well. And I want to specifically ask, in terms of what we mean when we say digital transformation, to what extent is this about transforming something? What is it? What are we really saying here? Are we actually trying to replace it, or usurp it, or combine it? Can you sort of elaborate on us now? Drill down a little bit what the definition actually means.
Sure. So my background is traditional finance, similar to a lot of my fellow panelists here. I spent around 16 years as a hedge fund manager, investment manager, across different banks, Morgan Stanley, Deutsche Bank, different hedge funds. I used to manage, credit assets, equity assets, right? But now my role is actually in terms of managing crypto assets for Animoca Brands. So I seeing the picture from both sides, and I will have to say for digital transformation, I don't really see it as a complete transformation. I see it as more of an improvement upon the earlier infrastructure from traditional finance, traditional institutions, right? So, but there's also ways that crypto and Web3 have improved upon the traditional infrastructure. For example, Uniswap, AMM, automated market maker, right? That is a massive innovation versus traditional market makers, a couple of guys, traders sitting there pressing buttons, but now we have a smart contract-based, trustless, on-chain way that anyone can be a market maker for assets. So, that's a really interesting innovation improvement. A couple other examples, right? Like the back office, right? Bank back office, traditional finance back office. A lot of intelligent and smart people there, but it's very labor heavy. But now with blockchain, using a smart database management, trustless database management, you have new innovations that can be built upon it, right? It's like Goldman and JP Morgan, right? They do these repo contracts using Onyx, using JP Morgan's blockchain network. So settlement that used to take 2 to 3 days now takes seconds to settle, right? So you have tons of these innovations and improvement upon the earlier system. So I wouldn't call it a transformation, I would call it upgrade, versus previous.
But that's digital assets helping transform traditional finance, right? That's literally the technology and so on helping improve the business. Michael, look, on your homepage at Bullish, you guys talk about being focused and developing on financial services for the digital assets sector. So it's sort of the other way around. It's not digital assets transforming traditional institutions, it's traditional institutions. So I just want to ask, is it controversial at all to say that mainstream institutions and retail audiences are still embracing digital culture, particularly in 2023?
Yeah, I'd say that there's been a structural shift, right? And I think what's interesting is, when I joined the team about 3 years ago, it was still a proof of concept to build this exchange. There were two major trends that we kind of identified. The first was if you mapped out kind of traditional finance's journey through the years, what you find is that actually as the industry grows, there's greater and greater kind of institutional involvement, and all of it kind of comes from this first principle nature of, well, actually, there is a reason why there's financial intermediaries that are helping to professionally manage money, right? And at the same time, you'd see kind of a growing kind of set of regulations that are helping to try to provide the right guardrails for it. And so we said, look, this place is going to be more institutional, more regulated over time. Why don't we build something for that? But at the same time, try to build something that is not just simply like a copy. Going back to Josh's point, like if we just simply took the model and transplanted it over here, does it really solve something? And I think the idea here was, well, what if we took some of the kind of more crypto native innovations, like an automated market maker, for example, and combined it into some of the prerequisites that institutions require because they're used to the idea of KYC and AML and properly managed and operating companies, and put it all together. That's kind of the idea, was to bring to the table. And I think with the best way to put it is, if you think about, kind of how we moved from horse-drawn carriages to, kind of internal combustion engines. I don't know if you've ever seen these pictures, but there used to be these pictures of the first cars having kind of the head of a horse, like a fake horse at the front, because part of the adoption was looking like the past. And you think that's kind of silly. But when you look at the first Model S from Tesla, at the very front of the car was something black that looked like a grill. But you don't need a grill because it's an electric car, right? So there's elements of that adoption and pushing forward, and I think it's not necessarily controversial. I think it actually is kind of helping that adoption story progress forward.
Vincent, you and I have talked quite extensively about this particular subject. Presumably what Michael's saying is music to your ears, right? Custody particularly, I know that you believe that crypto firms should be behaving more like traditional finance because there are good reasons for things existing the way they are. But then you look at what is happening in the world's banking system, a system that has been professionally managed and operated for centuries, if not millennia, and crypto's suddenly become the white knight, right? Is that a fair way to characterize things? I mean, how can we really expect crypto firms to be learning from traditional finance when things are going so wrong?
Well, I've always said that crypto firms can learn through traditional finance. Is more of the way of internal controls, separation of duties and powers. We've seen a lot of early days crypto companies doing everything, from custody to being an exchange to OTC and asset management. Well, you can't do that. And the reason why is we've seen the outcome of that recently with FTX. So for us, I mean, banks are really dinosaurs with their system. And I've sat in conferences and I've actually spoke about banks really trying to really advance themselves using blockchain. But they have so much data, old data, that is almost impossible to convert. And with the blockchain technology today, is the digital transformation that we've been talking about. Like for us, what does that mean? I mean, it's not new, as Josh says, it's an improvement. By using technology, we can track what is the worst fear for the government is terrorism financing, money laundering. Well, technology through blockchain can actually solve a lot of those issues. But there's also other issues that they can't look past. It's really control. So crypto companies have that control because blockchain is technically borderless. So how do you control something that's borderless at the same time, yet you want to advance? So this is something that we're trying to solve, but it is challenging.
Vincent Chong, I want to come to you guys at Ant Alpha. You've really positioned yourself almost exactly in terms of where this panel's title lies, right? Literally trying to transform traditional finance. Can you talk to us a little bit about how much of a linear journey is that? We know that pain points can be big issues when it comes to changing these things, but what's that transformation actually like at the cutting edge?
The main part of the interaction between TradFi, traditional finance with crypto is more about the liquidity. The crypto market just absorb the redundant liquidity from TradFi market, especially in 2020. The Fed benchmark rate just close to zero, and we can earn a lot of yields in crypto market, especially after the DeFi summer, even is higher than double digits yield. So that's the main part of the trad money flow into crypto, and now it's bigger enough, and we may talk about this later about the regulation because this is big enough. And the second thing is lots of institutions, they have allocation demand. They want alternative investments, especially on Bitcoin, and they buy and just stake, and they buy and hold it. And I think that's the main part of the interaction. Yeah. And so we four people and a company, we are all building the bridge just between the crypto to the finance, to the trad finance.
Yeah, I was going to say that's a really good segue. I was going to come to Josh with that actually, particularly because I think Animoca, as much as anybody, really sees themselves as a facilitator, right? You guys are very much at the cutting edge, but you're also an investment vehicle, really going out there and trying to seed a lot of these ideas. When it comes to particularly things around Web3, not solely crypto, not solely public protocols, how are traditional financial institutions approaching these? Because it seems like there's an awful lot of potential, and yet we've been talking about that potential for quite some time now, and it's taking these guys quite a long time to get up, isn't it?
Yeah, I mean, that's a really good question, especially in the broader macro environment that we're seeing, right? Especially given some of the regulatory pressure that we see in the US with the debanking of a lot of crypto companies from regular institutions, right? So a lot of progress that, unfortunately, that the US has made over the past, say, 12 to 18 months has been reversed. But luckily for us, we're in Hong Kong, and Hong Kong regulators are extremely supportive. So, I mean, I have to give a shout out to HKMA because after SVB, they were really focused on making sure that crypto companies and Web3 companies in Hong Kong had access to the right banks, had the bank accounts open. So, maybe you guys saw some Bloomberg reporting where HKMA is actually holding a roundtable between crypto companies and traditional banks, right? So, Bank of China, whatever, the banks CEOs will be sitting down with crypto CEOs to talk about how to improve credit lines, how to improve banking facilities to Web3 companies in Hong Kong. And that's a big deal, right? It's a big deal because US is saying, okay, we don't really, no, probably not, but in Hong Kong it's like, no, let's make sure everyone get banked, people get their checking accounts, right? Especially ahead of the retail trading, June sort of, launch period. So I can see how Hong Kong government is really supportive. And obviously, from an institutional perspective, we saw the green bond, tokenized green bond, launched by HKMA, with Goldman, with Fidelity, right? So are we seeing things happening? Yeah, we're definitely seeing things happening. Is it a little bit unbalanced between what's happening in the US and Hong Kong? Yeah, we're seeing that too. But being in Asia, being Hong Kong, we're very supportive of all the government initiatives here, and we're very, positive on the future of institutions and financial institutions in Hong Kong.
Yeah, Vincent Chok, I want to ask you about this issue of trust, which various people have talked about there being a clear absence of in crypto, particularly in the wake of FTX, but in the wake of a whole series of things that we saw last year, and now with banking crisis, perhaps a whole series of things there as well. How do we begin to rebuild trust at a time when regulation seems to be so uncertain and changing so fast? And for traditional financial institutions, how are they supposed to take the lead from regulators when things are moving at that pace as well?
depends which perspective you're looking at. I mean,
Well, Josh has just talked about the Hong
Yeah.
Kong perspective, so why don't we hear about your opinion on the
but
US
on,
perspective?
on trust, to rebuild trust, I mean, it's all about, for me, transparency. Like, we also need to trust in the government, in our regulators, which sometimes is the question, because a lot of crypto companies that we've seen in the US has put in a lot of faith. They've hired and they actually employ thousands of people in the industry, and by taking banking away, they're literally affecting a lot of people's livelihoods. So the trust in the government in some ways have been lost. But to us, we've always been questioned, well, how do crypto companies provide that trust? The only way is really, okay, proof of reserves, been thrown around a lot, transparencies, we gotta know who our clients are, KYC, we gotta know exactly the source of funds, source of wealth. I don't see anyone in this industry actually saying, no, we're not gonna provide you that. They are trying, but that always keeps changing. That level playing field is actually not level. So for us as a trust company, we're always trying to provide things that our regulators and other regulators seems to say, okay, well, why are you guys a little bit more special? So the government or regulators saying, we need more from crypto companies than we actually need more from traditional financial companies, just because the source of funds is questionable from crypto.
Right.
So we're trying to bridge that, and it's not easy.
Michael, Vincent's just talked about trust, and it sounded like, particularly for rebuilding trust when it comes to crypto, it's about rebuilding trust with the community, with the customer, with the audience. From a regulatory perspective, though, there's a clear failing of trust from their part at the moment, right? If you're a crypto company, or if you're a traditional financial institution looking to transform their digital asset exposure, how much trust are you putting in regulators around the world right now?
Well, I think we're still too early, right? To a certain degree, if you think about, like, for example, our journey, 3 years ago, we sought out to be regulated day one. And back in the day, there were very few who actually had, like, the understanding about blockchain or about crypto or digital assets to have a mature framework. And I think, to a certain degree, you're kind of seeing a little bit of this catch-22 moment where there's incredible amount of adoption, but at the same time, just, the still kind of early stages of maturity around how do you think about, properly regulating while encouraging innovation, but at the same time, providing consumer safety. And so I think there's a little bit of this kind of, we're still too early in the game. Let's see kind of how things go. I mean, what's interesting is when you think about theories of like network power, right? And how, for example, there's certain economies where they're saying, we don't really like this as much in our backyard. It doesn't just disappear. It actually shifts from one place to the other. And I think what's interesting right now is as you're looking across the landscape, there's kind of like differing kind of, I guess, directions of where people are pushing from the regulatory perspective, right? You've got, for example, over in Europe, a unified kind of framework to help drive that forward. Here in Hong Kong, there's greater and greater friendliness towards this. And, again, in what I'm thinking is a much more mature framework as well. And I think that is probably going to be grounds where you'll see greater adoption and greater push, hopefully, which also means that, more people will be a part of it, right? And I think that's kind of where, to a certain degree, like that idea of the reverse trust, right, in terms of trusting the regulator, it is, as long as we're kind of all open to this idea of let's adopt to try to solve these multiple objectives in a way that actually pushes and progresses us further ahead, then hopefully that will be the right move.
Vincent Chong, like, when we talk about transformation, this is in essence what we're talking about now, a different sort of transformation to maybe necessarily the one that everybody's thinking about when they're talking about financial institutions exposing themselves to digital assets, isn't it? What for you is the biggest challenge when they're looking at how the environment globally is shifting and transforming itself?
Well, I mean, it's as a financial institutions. I mean, we were in crypto, so I mean, we need to build our trust on multiple ways. So I would say, like, following up the Michael's question. So I think there's no 100% trust. There's only sure and unsure. I mean, even according to the things, the SVB and Silvergate things happened last month. It's like it's a saying that if traders are unsure about crypto prices, they flee to stables. If they are unsure about stables, they flee to banks. If they are unsure about banks, it's time for Bitcoin to shine,
Right.
right? So there's no 100% of trust things, but we are, we're still actively working with regulators, and we are trying to, as Vincent just mentioned as well, we are partner with our partners that providing the proof of reserve. This is ongoing projects.
Josh, I want to ask you about infrastructure as well, which is something I think we've sort of had as a bit of an undercurrent underneath these discussions, particularly what Vincent Chock was saying about needing some of the things that traditional finance already has there, and maybe regulation is one of them, maybe it isn't. Look, companies everywhere are cutting metaverse divisions. Disney just this morning said that it was getting rid of its metaverse as part of $5.5 billion worth of cuts. Jobs are being lost. Investment is going in the wrong direction on that front, right? So when it comes to trying to build forwards, how can institutions that are looking to expose themselves even begin to have trust or look to the future when things are scaling back?
Yeah, I think it's really about time horizon and perspective, right? So if we're looking at all the news flows in the past 6 months, sure, it sounds kind of bleak. But if we expand the time horizon, say, over the past 5 years, right? So I kind of started buying my, Bitcoin like 5 years ago, 2017, 2018, right? Still pretty late, but hey, since then, my crypto portfolio has outperformed SPX, has outperformed NASDAQ massively over the past 5 years, right? So it's all about perspective and how long of a time horizon you look at, right? And in terms of institution adoption of crypto, what we really have to focus on, and a key metrics, I believe, is developer content, like developers' input, right? So when we look at, and we track all this, we look at how many developers are moving from Web 2 to Web 3. We're talking about a CAGR of 100% pretty much every single year, right? So headline, you can see like, oh, okay, Meta want to do this, Meta want to do that. But for us, it's really about independent developers who really want to get into the game and start making cool things and applications, and that's really going to drive future adoption. Mm-hmm. And like for Animoca, for us, right, a lot of the US firms are not representative of global participation. Like for example, for us, we talk to Korean companies, Japanese companies, listed game studios all the time, and they're all waiting to get into the game, and they're all making investments, making strategic investments, doing JVs, right? So when we see through our lens at the amount of institutional adoption, we're actually very positive and very hopeful that these things are going to come along. But of course, we're going to have setbacks, here and there. The industry is very volatile. Every couple of years, we'll have like an 80% drawdown. That's just normal, right? Like for people who've been in the space, like that's normal now, right? But look at this year to date, Bitcoin's up 60%, ETH is up, 45%. So what are people worried about, right? From our perspective, like everything is pretty positive. Investments are continuing to go. We're seeing a lot of companies, traditional companies, interested to participate and adopt. So, very overall, very, very positive.
Michael, look, the temptation in crypto is always to fixate on price, isn't it? But I wonder, particularly with Animoca and NFTs and games and so on, if the need to look at utility is really something that financial institutions are and now maybe should be thinking about when they are looking at their investment horizons, which may be 5 years, it may be longer. Is there enough utility in what is currently available to these institutions that is really transformative enough for them to big their exposure?
So I'm a huge believer in this particular theory called jobs to be done. It's kind of coined by this famous Harvard Business School professor called Clayton Christensen. And the whole theory was simply that, innovation kind of comes from this understanding of causation. And if you're able to identify a job, like something that actually needs solving for and someone's willing to pay you money, then that's where value comes from, right? You start to create value. And I think the more and more that, innovators, builders in this space have identified these jobs to be done, create real, actual solutions through the use of this technology, and also ones that are best for that particular problem, right? Like there isn't some alternative out there, then you'll see real value come out. And I think this particular, call it like crypto winter, has really pushed that commercial need forward, right? Because companies can't survive unless you're making money. And you can't just build products that are just novel and interesting. They have to actually do something. And I think that as you're starting to see more and more of that resilience push through, and more companies in the crypto, Web3, blockchain space building for this, I think investors will identify that as real value created, real commercial value created, and therefore it's not just simply a speculation on the price anymore. You're actually building into some infrastructure, you're building into some world where there's real utility that has that commercial value. And I think that's where, at least I'm pretty, sorry, pardon the pun, bullish, because every conference I go to, there's like another problem that happens, and every single person I speak to is like, how are you solving the problem? I'm solving it this way. Let's work together. Let's build something better. And it's every single time these things happen. And so I'm extremely positive that we just keep on building towards that, and that will attract the patient capital that's been eyeing the industry, wanting to look for good reasons to invest, that they will be coming hopefully soon. But I believe they'll find real value created in the space for them to say, yes, this is where I want to invest my money.
Yeah, it's one of the great things about this space, isn't it? The desire to fix and try and solve these problems. Vincent Chock, look, we've only got a couple minutes left, but I just want to come to you and ask you, what is the biggest thing that financial institutions need to figure out when it comes to digital assets? What is it that's holding them back right now? What is your advice at First Digital to these guys? Where do they need to go and really problem solve? Where do they need to listen?
I think traditional institutions really need to look within their own ecosystem. Basically, crypto is another asset class. And if you just break it down, it's very simple. It's a digital commodity to me, and that's been what is classed here. So how do you treat that? I mean, commodities could be anything from, so a lot of financial institutions actually deal with commodity. So if you treat crypto as a commodity, you apply proper compliance, proper controls, that's all it is, really. Break it down, basics. But the question is, their regulators are always looking through, well, where is the source of that commodity from, right? If you rely on proper third-party custodians that are licensed to conduct KYC, I mean, there's companies out there now that are really advancing in eKYCs, right, that we're working with. And I think those companies are really making, I mean, you think about things that should be, like, in our day and age, why are we still holding a pocketbook called a passport when everything should be really electronic, right? Why are we, like, KYC is basically, can you provide your proof of address, which is a piece of paper? So there's things that are advancing so fast, but there are things that are still so behind the ages.
Yeah.
And it's really frustrating because we have to rely on those particular ways to satisfy the regulators, but at the same time, that is actually restricting advancement.
And Vincent Chock, I just want to get, we only got a minute and a half left, just to sum up. If we can get these things right, can you paint us a very brief picture of what it could do? What is the potential here that we haven't unlocked yet that we could get to if this transformation can go well?
You mean how crypto can help the...
What's the best case scenario? Paint us a picture.
Well, I will divide this into two parts.
Okay, well, we have a minute left.
Yeah. The one part is like actually the crypto, the blockchain technology itself is just innovation, and it's peer-to-peer network, and like Bitcoin, and it's like it couldn't be regulated. Let's say if you are just like the cash in your physical wallet, you cannot regulate the cash. How many pieces in your wallet, right? You can only inflate it, right? But I mean on the other part. So, I mean, we can see a full mapping of the traditional financial systems, so banking systems, including the trading and the custodian, things like that. We can build up very comprehensive functional systems on chain, and with low labor cost. That's it.
Great. All right. Well, thank you very much to all our panelists. I just want to conclude by saying, look, this banking crisis, the crypto winter, a lot of it has been framed as a problem of crypto. I think if you listen to our panelists today, and particularly to this last point that Michael was making a moment ago, crypto and blockchain offers a conclusion, not a crisis. And this is something that I think all of you are working towards, and I think this is one of the best things about this community. So look, thank you to our panelists, thank you to everyone, thank you to you for listening.
Thank
to
you.
us.
Thank you.